Hey guys, this is Boom Traders and Tintin Trading, and today I want to talk to you about the concept of a follow-through day. Now, we've been mentioning many times within the chat that we're looking for a follow-through day before we start getting back into the market. For those of you who are watching the video for the first time, at Boom Traders, we issued a sell signal about here at the high in November, and since then, the Nasdaq has actually corrected over 32%. As anything above 20 is considered a bear market territory. So we've been very light and very cautious about getting into position all the way down to here. We did get this rally up, which was also encouraging, of about 17, 18%, whereby we started looking at some names and getting into some stocks, but that quickly failed with a few distribution gains afterwards, and now has undercut the lows of the previous rally, which has put us into cash. We did get a valid follow through day on the 17th of May, and this was the reason why we started looking at a few positions. And in the Tintin office, we did open one position that quickly reverted and closed the next day on the 18th of May. The reason we're doing that is because one of the rules that we have, it's a Bill O'Neill rule from the Investor Business Daily, is that once you get a follow through day, you want to definitely get some position, no matter how small. This is the current correction. The follow through day has been violated by undercurring the rally day low, which happened on Friday. And now we're still waiting for a follow through day. And I'm just going to show you a few examples into the history whereby you would see why we're looking for follow through days. First off, we're going to head back into 2010, and that's going to be September, which is right here. And as you can see, similar, the market at that time was getting some difficulty to rally up. We did get about 18% here, correction to the low, so 18.18, 19% correction to the low. It wasn't as strong as the correction that we're getting now, but as you can see, we did have a bigger correction back in 2009 after the global financial crisis. And then within the first leg up, we will continue to get this under pressure scenario into the NASDAQ composite. As you see, this is the day when we got followed through. The reason why I'm showing you this is because I want you to see that following that follow through day, and even before clearing up all the movement down and making all those new all-time highs, to see the leaders as they have emerged upon this move here. And as you can see, there are a bunch of leaders which have made a really impressive moves on these days. So for instance, 2 days before the follow through day, we had RVBD with 133% move up after this breakout, TIBX with 143% move up after that breakout, CMG right on that follow through day with impressive 186%. And then within a few days, you would see that about 3 or 4 days afterwards, you've already got about 6 or 7 leaders which have made impressive moves right away. From then on, you would see that a few other stocks are coming up. And for instance, Lulu, which is about 26 days after the follow through day, is actually the one with the biggest advance of making 274%. Now, the rule, according to the IBD studies, is that all cycles since 1880 show the best stocks take off within 3 weeks of the follow through day rally. So, what the IBD team has done is actually they've looked all the way back to 1880 and then they have seen that all the best stocks take off within 3 weeks of that initial rally. So you would see if we take that, 3 weeks is 15 days. So up to that point, you would see you get a bunch of massive leaders. That doesn't mean that afterwards you're not going to get good examples, but that the biggest winners are the ones that come out one or few days before on the actual day of the follow through day or a few days afterwards. So this is very important for you to know. And this is the reason why we have the rule of buying anything that has set up on the follow through day as it occurs. Now, if we move forward and see what's happening since the market starts to rally, then it's having this difficult period, and then it started correcting again. We get this correction from the high here, and with this very steep correction, 2011, of all the way up to the lowest point being about 20% from the high to the low. Now, this seemed very bearish, difficult period for the market. But again, as we start to bottom up, and we say that many times in Boom, that bottoming is a process, we did get a valid followed through day here after this rally day here. Now, what's happened since is exactly similar situation to what we got before. And the stock moves here that I'm showing you are a bit smaller because the study for my video actually goes only up to March. But from the follow through day to March 2012, we are getting a bunch of stocks within that few initial weeks of the follow through day. So there's 43% winner with that just this leg up. There's BWLD with 44%, ISRG, and you can see how and when these stocks were breaking out after the follow through day. This is why it's important to stay around, look at the markets, see where this leadership is setting up, because there are stocks which currently are showing leadership. There are stocks which are being accumulated by the institutional investors, and these are going to be the new names which are going to make the massive moves within the next leg up. Of course, very likely is that these would emerge from a new sector or a new theme rather than the big tech stocks. What we want to do is to observe and react. So as you see, a bunch of stocks are setting up on both followed through days. This is the reason why we are waiting for a followed through day here in order to see if we're getting this move up of stocks that we can see a new leadership emerging and coming to the same situation as we have here and grab a bunch of leaders all the way at the beginning of the follow through days. This all ties up with the methodology that we're teaching you in the Boom server, whereby we're staying away from this volatile period, which is very risky, very uncertain, and we keep our portfolios secure and our powder dry. The reason for this is that when this leadership occurs, we are not going to work to clean any big drawdowns that have happened on this rally, but rather we'll be starting from a clean slate and we're going to be jumping right into the stocks that are making the big moves, rather than making up for losses all the way down if we've been aggressive when we shouldn't have been. So hope this was useful and hope now you understand why the follow through day is important to look at. If you want to check out more content, look on our YouTube or our Premium Insider video about how to trade leaders of the market bottoms. We've made on YouTube a video about that, and you'll find it very useful and interesting to see what kind of leadership might occur around the follow through day and around the bottoming process. So thank you and see you in the ring.